all the success for 2023. I appreciate the messages and the comments. Thank you very much. Just going to run through some stuff on the charts now. Some people want some videos, and hopefully this one can be useful as well. This is, to help the higher time frame direction and order flow and being in the most high probable areas. It doesn't mean that I didn't trade from here, because I did. I took buys from here, I took sells from here, buys from here, sells from here. I took these trades because I've got my criteria and it was met. This video is just going to be, showing you the high probable areas, when the sell cycle might be finishing, when the buy cycle might be starting. Can you follow price action? Do you see the liquidity? And hopefully that could help and you could implement it into your trading. Hope you enjoyed the video and we'll get into it. This break of structure here, this high that puts in this low, and then why this market shift is important here. Because if we take the whole leg, we know if we get a market shift at the bottom of the leg, price is likely to come into premium, expensive prices to be selling to then continue with the momentum. However, when we do come into premium prices, we fail to put in a new low, and then what happens to price action? It puts in a new high. So this is just to try and help people from the 4 hour, the 15 minute, pro trend, higher time frame, pro trend, pro order flow, and staying on the right side of the market. The 4 hour, the 15 minute, and not get caught up on the wrong side of the market. Because this is of course bearish. So people may be like selling from here, constantly selling all the way up this leg, constantly selling all the way up this leg, and wondering why their trades might not be playing out. But that is because here, if we look, the high, the low, we've got a market shift, and we've failed to put in a low, and then we've put in a new high. So now, if we forget this price action for now, because these are reaction points when we are bullish. We've had our market shift, let me mark it up. This is when we don't want to be just caught selling. Of course there is going to be opportunities, especially if you're taking your 1 to 3s, 1 to 5s, just trying to build the higher time frame story, direction, and be on the right side of the market more than we're wrong, just to help with psychology and confidence. So we've had a market shift, this is a high, this is a low, and then we put in a new high. So we have a break of structure. And if we forget this price action and only look from the market shift onwards, this price action here is really showing that we are bullish, and the sell cycle may be finished and we may be coming on to our buy cycle. Break of structure. And what happens when we are bullish? In theory, the highs are weak and the lows are strong. So we want to be buying if we are in a buy cycle. And following rules is going to help a lot. And on the 4 hour, for the POI to be valid, it needs to sweep liquidity, cause a break of structure. That's the rules met on the 4 hour, and of course this high has been broken. Same here, we have this liquidity sweep and the break of structure. And some people may say like how, or struggle to get POIs, and you could filter out a lot of POIs by just measuring the leg and taking the extreme, the POIs that sweep liquidity and cause a break of structure. These are strong levels of demand, and this is going to filter out any losses or, buying from here when the market is going to be coming into discount. And of course there is going to be trading opportunities in here, sell opportunities all the way down. I'm not talking about them in this video. This is just trying to follow the higher time frame and know where you are within the market, the cycles. But it is going to be 3R, 5R, 10R trades in here. But just trying to follow price action and know what it's doing. Higher highs, higher lows, understanding the candles, stuff like that. So we have this POI. And using the tool, these are the most high probable POIs that swept liquidity and caused breaks of structure. Someone might say, why not this one? It's a bit higher up in the leg, and above a POI that sweeps liquidity, that is a demand chain, causes a break of structure, is engulfed. Only remember, the rules is only to sweep liquidity and cause a break of structure. But when you look at price action and look at what it does, this sweeps liquidity, engulfing candle, causes a break of structure, leaves resting liquidity behind. It gets swept. Same, sweeps liquidity, engulfing candle, causes a break of structure. What does it leave behind? Resting liquidity to take into the POI to fuel the move higher, to put in the new higher high. So that's how we could find, strong POIs. And then we have our alert set on the POI. Remember, there's going to be plenty of opportunities in these, sales, blah, blah, blah. We're just trying to understand what price action is doing, the cycles, and following the edges when we are in a bull, and bullish, so trading from the edges. Because if you've got the stamina and the mental stamina, you can hold a higher low to the higher high, yada, yada, yada. And if you know what price action is trying to show you by bullish, so this price action has been bullish, you're not going to be mentally fatigued when your sales are not working out, because you know the buy cycle has started and the sell cycle has finished. Right, our alert has went off. And some people do say also, how do you know what POI to select? That's why we have the rules, and we try and get the strongest POIs, and we don't know where this is going to go. This is why we wait for the medium time frame, the 15 minute, to realign back to bullish. No one knows what POI is going to get hit. So we've got our rules, our strong points, and then using the other time frames to realign. So the 15 minute. And the same as what you've seen on my recaps on the 1 minute, same stuff happens on the 15 minute. This candle pulls back, so this is a candle we would want to see right now, the market shift happen. Now this candle's pull back, so it would be here. So we've had a market shift. And I'm just doing the 4 hour, 15 minute, I'm not going to run through the 1 minute, it wouldn't go to here, but the same thing happens. Once you hit the 4 hour POI and the 15 minute realigns, then you look for the 1 minute to realign from the 15 minute POI with all the same rules. On the 15 minute, the rules are the same as the 4 hour. Sweep of liquidity, break of structure, and then are we in discount of the leg? You would have seen from the trade recaps. So we have our market shift. And this sweeps liquidity. This candle sweeps liquidity, but we're not going to trade for this candle, so you bring it down to the range. And also with it being the 15 minute, I would take 50%. And some people might say this may be a liquidity sweep, and it may be, but with all the other confluences of price action is bullish, we're in discount leg on the 4 hour, the 15 minute is realigned bullish. If demand is in control, this should hold. So let's see. Okay, so it's definitely demand is in control, and what you can also see, selling, supply and control, we range, price action is ranging, so buyers is coming to the market, we've slowed down, we're starting to make highs, higher highs and higher lows on the 15 minute. The 15 minute is realigned with the 4 hour, so we are pro trend, higher time frame, pro trend, order flow. Again, it sweeps liquidity. Causes a break of structure. And depending how you like to measure the leg, the most recent leg would be from here, from the bottom would be from here. We are in discount. But everything is being met. I would be happy to trade from here. And we always want to put the floor in and then take it to the high. Some people like to use the whole range, depending from your, back test and the data you've collected. So we're again on the 15 minutes, we've made our market shift. We've had a low, our high, a low, and we should be coming back in to make a higher low before putting in a higher high. Again, I don't hold my trades. What I'm going to show you now is just to show the power of the higher time frame, knowing where we are in the cycles. This high is going to be weak because we are bullish, and this doesn't mean you've got one trade in this whole time frame. On the day sessions, that we're trying to put in a new higher high. This is weak, this is what we target, so we could, whenever using our rule sets, could be buying from here, buying from here, buying from here, because we know we are bullish. So if we're taking sales and getting taken out, we know what's going on within the market. I'm just trying to stay on the right side. And yeah, the new higher high has been put in. And that is just following the 4 hour and the 15 minute, and trying to be on the right side of the market. Could you imagine if you were, and you are going to get sales from here, but if you're getting sales and you're getting mental fatigue, wondering why they're not working out, or you're on the wrong side of the market, if you just wait for the 4 hour and the 15 minute to be realigned, and then trade 1 minute confirmations within your 15 minute demand levels, using the sweeps of liquidity, the breaks of structure, and then measuring the leg, you're going to be on the right side of the market a lot more than you're wrong. It's going to help your psychology, becoming consistent and profitable. Thank you. I hope this video helps, and catch you on the next one.